Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. This week we're going to take a hard look at the tasks before the new SEBI chief, Ajay Tyagi, presently Additional Secretary in the Ministry of Finance, who will take over as the SEBI chief on the 1st of March. The appointment comes 6 years after the present chairman, UK Sinha, was appointed in February 2011 for a 3-year term, which was then extended by 2 years and then again extended by a year. It also comes under circumstances very different from when Mr. Sinha was appointed. Not only is the regulation of commodity markets now under SEBI, but technology has leapfrogged. Terms like high-frequency trading and co-location are part of the lexicon of capital markets. Stock exchanges are getting listed. Indeed, Bombay Stock Exchange has already got listed, and NSE will soon be following suit. Retail investment in capital markets is perhaps at an all-time high, even as issues of corporate governance are surfacing at some of the most respected companies of India, all of which makes the challenges before the capital markets regulator particularly daunting. So how should the new SEBI chief go about his job? What are the challenges that he'll have to overcome in the 5 years that he has? We're going to try and chart out the agenda for him with the help of two experts. Rajiv Kumar, Senior Fellow, Centre of Policy Research, New Delhi, who has just been appointed to the RBI Central Board, and Mohan Das Pai, Chairman, Manipal Global Education, and also a former member of the SEBI Board. Welcome to the show, Rajiv. Mr. Pai. Before we get into the nitty-gritties, let me start by asking both of you something that has always puzzled me. Why is it that there's so much less frenzy over the appointment of the SEBI chief compared to the RBI governor? The government's decision to appoint Mr. Tyagi got just a single column on the front pages of even the business dailies. This is quite unlike the kind of media frenzy and speculation that accompanies the appointment of the RBI governor. Granted, the RBI has always been seen as taller than the other financial institution regulators, but would you say the relative lack of interest in SEBI is somewhat surprising coming from the media? And does that make the SEBI chief's job easier or more difficult? Mr. Pai?
Well, I think you must look at what happened to Dr. Raghuram Rajan in the end. There was a controversy. Subramaniam Swamy was after him, and there were many media reports. I know Dr. Rajan went around town making comments about giving lectures on many sensitive topics. So I guess too much of controversy is there, and government was waiting to see what will happen, whether he'll get reappointed, whether there'll be public pressure. So I think the media frenzy built up, whereas in the case of Mr. Sinha, he had 3 + 2 + 1, and I think the government did the job very quietly. There was no controversy. Things are going very well, and I guess it went very smoothly. So only one line in the newspaper.
Okay, and does that make his job easier or more difficult, Mr. Pai?
Well, it makes it easier because the media glare is less. Poor Dr. Ujjit Patel, whatever he does is on media glare. They compare him with Raghuram Rajan. He has a very different style. So I guess, he'll have much more of a challenge.
Okay, Rajiv, would you agree? And I also wanted to ask you that the government has once again opted to appoint a bureaucrat to the top job at the market regulator. In fact, with the exception of Mr. Bajpai, who was from LIC, all our SEBI chiefs to date have been bureaucrats. This is in contrast to the RBI, where the government seems to have abjured the temptation, or should I say resisted the pressure from the IAS lobby and appointed economists to the top job, at least in the case of the last two governors. What are your thoughts on that, Rajiv? Would a specialist who's familiar with the markets, maybe a market player, be better than an IAS officer who is, after all, a generalist? I know Sinha's done a fairly good job and he was a bureaucrat too, and Mr. Tyagi has been dealing with capital markets. But even so, Rajiv?
Mythili, let me first answer your two questions one by one. The first one, while agreeing with all that Mohan Das Pai has said, let me give you a structural reason for which the RBI postings take a much bigger visibility and public view than the SEBI chief, and that's simply because capital markets in India are so underdeveloped. Only 3% of household savings come to the capital markets, while the RBI, because it covers the banking sector and the NBFCs, etc., touches practically every Indian and every aspect of India's economy. And the capital markets are even now, I'm afraid, seen as something of a speculative satta bazaar, where most Indians, even middle classes, are hardly interested. So unlike the US, where about, I think, 75% or more households are invested in capital markets, I think barely 5% or less of our households are invested in capital market. So therefore, it doesn't make for any media. It's not a media story if you appoint somebody in either in SEBI or in the head of PFRDA. So that's my reason for which the SEBI chief appointment is such a low visibility item for the media. Whether it makes its jobs easier or harder, I would beg to little bit disagree with Mohan, because I think it makes it harder simply because it doesn't give him the due policy attention and due public attention, which will incentivize him to do better and better. And because there's a huge role there to be played to expand the capital markets in our country. On your last question about the IAS and the non-IAS, I can't really comment on that because I was a part of the selection process, and I therefore know what went on there. But I think let it suffice to say that the selection committee did choose the best, from both the IAS and the non-IAS, which were duly considered for this particular appointment.
Well, I hope you're right on that, Rajiv. One can only hope so far, because so far, yes, the SEBI chiefs have done a pretty good job. But Mr. Pai, Rajiv touched upon an issue about capital markets being very underdeveloped in India. And that is true. And if you look at SEBI's roles, they can broadly be classified under two broad heads: market regulation and development, and protection of investor interest. Now, which of these two roles do you think is more important in the Indian context? And what do you think the SEBI chief should focus on in the coming years? Development of the capital markets?
If you look at data, the total market capitalization is 116 lakh crore, which is more than the banking deposits. And in the banks, the great majority, 80-90% of depositors hardly know what RBI does. They're ordinary people. They don't understand the sophistication of the marketplace. And tomorrow, the stock market falls 20%, you'll see, fire all over the place. So I think the stock markets are important too. You can't whisk them away and say we are underdeveloped. Yes, they're a smaller part of household savings, in the sense smaller part of number of people hold stocks. But even then, if you look at the percentage of stocks, it could be 50-60 lakh crores in India, largely to institutions. Now, of course, the mutual funds have a very large stake, but particularly from India. So I would say that things have changed. It's not as if what it is. But whatever it is, I think the most important thing for the SEBI chairman would be to look at market development, how to broaden the equity sweepstakes in this country, because on investor protection, I think a lot has been done. It has stabilized very well, and things are going on well. I think the regulatory aspect is fabulous. Sinha over his 6-year period did a fabulous job in quietening what was happening. He went after people who were, running away with the investors' money. He punished people. I think a lot of things have happened for investor protection, but market development continues to be a concern, even though there are signs of improving, because you're seeing inflow into the mutual funds in India going up tremendously. And I think the Indian mutual funds are playing a larger role and balancing it out. I saw them to have 62% of the stakes or the FIRs, which is very, very good. And I think it will increase in future, so we'll have a very good balance. I think, but development is very important. We want more companies to list. We want them to raise capital. We want more equity to come into business, because we're seeing stress because of high debts. So I think market development should be the key.
Rajiv, would you agree with Mr. Pai that actually, in fact, the capital markets has developed considerably? Or would you say that the very fact that such a minuscule proportion of the Indian population actually invests in stocks shows that SEBI has not really succeeded in ensuring greater market penetration? So what can SEBI chief do to increase participation? Or is it a given that India will remain a bank-dominated economy because our income levels are so low, there's a lack of social security, so the capital market will always remain somewhat elitist? Rajiv?
Yeah, Mythili, I should have done, but I have not done a simple thing about comparing market capitalization and the participation of private households in capital markets in other countries, in other economies which have a comparable per capita income to India's. I think, I'm not sure, but I think India may be quite there, but slightly below, and which is, as I said, because the Indian households still perceive the capital markets as satta bazaar, where speculation runs rife. And and one of the things is that the thinness of the market is seen by the fact that when foreign investors move in and out, the Indian stock market takes dives or plunge or goes up accordingly. So there needs to be much greater depth in the Indian market, and much greater, if you like, and they have to also spread regionally and horizontally all across the country, which they have not done. So therefore, as Mohan has said, I completely agree that market development remains the very essence of the SEBI chief's job, and I think he would do very well to follow in the footsteps of his predecessor, Mr. UK Sinha, who has done a tremendous job in going after the speculators, in going after people like Sahara, Subroto Roy, or the Ponzi schemes, or the chit funds, etc., etc. But there is still a huge informal capital market out there in the country which needs to be regulated, which needs to be brought in, which needs to be formalized. And I think that is a job of the SEBI chief and of the SEBI as an organization. And I think there is sometimes a temptation for the SEBI chief to overplay his regulator role, and because that is more visible, that does bring in immediate outcomes. But the investor training program that UK Sinha has investor education program that he had started should be spread much more widely. And I think therefore, along with regulation, which brings in the confidence to the householder, to the household saver, that his money is in the right place. The market development is going to be the key for the next 4 years or 5 years of Mr. Tyagi's tenure.
So both of the experts agree that market development must come to the forefront as far as the SEBI chief is concerned. But Mr. Pai, if you compare the US Securities and Exchange Commission objectives with SEBI's, one finds that facilitating capital formation is a key part of the SEC's objective. But there's no such mention when it comes to SEBI's objectives. So is there a case for amending the SEBI Act to take care of what, to my mind at least, should be a very important objective in a country like India that desperately needs to incentivize capital formation? After all, just recently we amended the RBI Act to make it an inflation targeter. So should we do likewise to SEBI and say your main target is capital formation?
Mythili, I would pause for a while before we look at amending the SEBI Act for a very, very important reason. SEBI, RBI and everybody else is the midst of getting up the debt markets. And the debt markets have to play a larger role all over the world than the equity markets. Debt markets are always larger than the equity markets, and we don't have a vibrant debt market. They're working on it now. On the electronic platform of BSE and NSE, more and more debt is being raised. Maybe some mandate has to come, and we must tell all the banks, to RBI and the government, that all financial institution banks should mandatorily raise money from bonds on the electronic platform rather than in the OTC. I think that will change. And then we must bring in some measures to increase liquidity so more trading happens. So I wouldn't go to change the act right now, because SEBI has got the commodities exchange on back of it. They're engaged in handling the debt markets. They're also engaged in making sure that the 2 stock exchanges are going to get listed. One of them is already listed. They have to wait and watch how they behave after the listing, because listing opens up other possibilities for them and it has to stabilize. I think they got a lot on the plate. They should carry on. Maybe 2 or 3 years later, we should have a full review of the entire SEBI Act and then see what needs to be done. And there's one issue I want to join issue with Rajiv, and that is, over the last 6 months, we have seen a new phenomena that whenever the FIs are sold, the local mutual funds have brought shares. And if you look at the inflow, outflow of money, you find that the matching, the market has been fairly stable. FIs have been selling and removing money, but the local institutions have been getting inflow of money and they've been coming. So Rajiv, I think we're seeing some new trends of a better balance in the flow of money between FIs. The market will not fall if the FIs come and sell like it used to do maybe 3-4 years ago. It's much more stable now.
So the market is much more stable, but on that note, it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're trying to draw out an agenda for the new SEBI chief who takes over on the 1st of March. Rajiv, Mohandas Pai spoke about retail participation having increased, but the fact is that it's still very low, even though there is much greater interest going by the number of the way MF folios, mutual fund folios have increased. But will this prove transient? Because in fact, many would argue that SEBI's really had very little success in dealing with the rampant rigging that happens in the case of what are called penny stocks, the low value, illiquid stocks whose prices are pushed up through circular trading. And this kind of thing does dampen investor confidence. So can we hope that retail investor interest will remain sustained? Rajiv?
No, as I think retail investor interest will rise over time. But if the penny stocks and those, where you've got active speculation going on, because these are stocks, which have nothing nothing substantial to sort of show for their for their ups and for their volatility or for their ups and downs. I think SEBI is cognizant of that, and I know for a fact that SEBI has a huge program for identifying sort of market disruptive moves by any brokers, etc. And they do the job very efficiently. But I think it will take time before householders get attracted to the stock markets. And the other thing that I would say to attract the householders is to expand the number of exchanges that you might have in the country, because given the size and plurality and multiple and diversity of India, I think having just 2 exchanges may not suffice as we go further. So I think it is time for SEBI to seriously consider licensing some other exchanges, so also to break the kind of duopoly or monopoly in some cases which these exchanges may have, and to bring in some competition, which is always a necessary and a good condition to boost performance and improve performance.
Yes, in fact, we did have a large number of regional stock exchanges, but their performance was so poor that's why I think many of them closed, because they just could not face the competition from NSE, particularly after dematerialization electronic trading. But Mr. Pai, does the answer to rigging of penny stocks lie in changing the way we tax capital gains in India? In fact, earlier there was some speculation that government might try to bring about greater parity between taxing capital gains and other income in this year's budget. But thanks perhaps to fears that markets would not take kindly to such a move, the government did not make any move in this direction in this budget. Do you see government revisiting the idea in the remaining 2 years that it has? After all, there has been a great deal of concern about rising inequalities, particularly after the publication of Thomas Piketty's book. Mr. Pai?
Mythili, I think the answer to that is not law, but much better effective prosecution. We have a major challenge in this country. We don't have adequate data analysis. We don't have adequate capability to analyze what is happening and find out. We don't have adequate prosecution capabilities, and our courts don't work. The courts take too long a time. So like the SEC has fantastic prosecution capability, it has fantastic investigation capability, it uses data, and within 1 or 2 years it brings people to book and the case gets over. Now just look at what happens to SEBI. The investigation takes a lot of time. They must improve the investigation, they must have better people, more technology, etc. The prosecution ability should also increase. That's very important. They must have more prosecutors like the SEC has. And the court systems have to improve. And you must come out with orders in a short period of time and not elongate it. And the appeal process has to be shorter. In the United States, the appeal process is very expensive. And lawyers are very expensive. The people prefer to settle. Even in India, we need to have that. Now, for these penny stocks, everybody knows in the market what are these penny stocks. Everybody knows in the market who are these brokers. Everybody knows which city it comes from majorly. The information is available. Somebody has to sit down, analyze all these stocks and put them in the X category or some Y category and do something else. Because in this country, if you go amend the capital gains laws, the good people get hurt because the income tax officers will go after the good people. The bad people know how to manage stuff. So I think we are a very different country. We must first improve the ability to investigate and prosecute rather than change the law, because the existing law has got enough capacity, but there is no proper investigation and prosecution mechanism.
That's true, very true, Rajiv. In fact, Mr. Pai spoke about it's not the laws that are at fault, it's partly because SEBI itself is handicapped. Because another area where SEBI has had very limited success is in the area of insider trading, especially if you contrast the way the SEC nailed Rajat Gupta after such a detailed investigations, and the way SEBI had to drop proceedings in the case of Reliance Petro Investments for want of evidence. Similarly, in the case of Rakesh Agarwal, Sameer Arora, SAT had set aside SEBI's order. So is failure inevitable given the limited capacity of SEBI to tackle these things, Rajiv?
The limited capacity of SEBI is not a given. I mean, they have the resources by far to expand their capacities, and having visited SEBI recently and been given a guided tour of their technology and their personnel capacity, I'm reasonably convinced that they are on the right track. But it will be Mr. Tyagi's job, and it will be Mr. Tyagi's job to expand these and enhance these capacities as soon as he can, so that, as Mohan says, the persecution and the investigation time is reduced. But the key of the whole thing is our court system. I mean, SEBI did whatever it had to do in the case of Sahara, but the case just drags on and on and on. See, so this is where the judicial reform must come in, and I think all of us owe it to our country and to ourselves to make a much bigger noise about the urgent need for judicial reform so that those who are culpable and who are convicted are punished to sweet. I mean, they're punished as soon as possible, because without that, a capitalist system just doesn't work. A capitalist system works on the basis of quickly and cleanly administered incentives, which is punishment and rewards. And our court system prevents that from happening. And I think SEBI is really constrained and hampered in that respect, and not so much in the respect of his internal capacities, which are quite substantial, but of course need to be improved.
I know you feel very strongly on that, Mr. Pai, so I would like you to comment on that also. But I wanted to ask you a question about, we've been seeing issues of corporate governance coming to the forefront in the case of two of our blue chips, one of which you were closely associated with. What can SEBI do to improve the quality of corporate governance? Take, for instance, a change in regulations regarding the composition of the board of directors. As we've seen in the case of at least the Tata companies, independent directors are not really as independent as one would like them to be. So what can SEBI do to improve the quality of corporate governance?
Mythili, the corporate governance norms are very clear, all right? And I think, everybody's been elucidated, is beaten out of shape. What is required is the implementation. And sadly, independent directors are a rare species in this country, and most of them are not independent, as the Tata things show. And even in the case of the Infosys too, I wish the independent directors have put the foot down for some corporate abusers. And I find it very funny that analysts and many investors write all kinds of reports not asking for better governance. I think they need to be more careful and not let their greed override the need for better corporate governance. So I think there's a part of an evolution. We come to a stage when all the norms have been set, the rules have been tightened. I don't think you should go on doing more and more because it becomes a checklist. But I think greater exposure is required. The media has to play a role. A greater debate is required, as is happening right now after the Tata and Infosys saga. I think that will improve governance over a period of time.
Rajiv, Mohandas is right in saying that SEBI has done as much as it could to ensure that the composition of the board changes, etc. But is that enough? In the recent controversies, whether in the case of the Tatas or the Infosys, there is a sense that SEBI was nowhere in the picture. Whereas given the kind of allegations that were made, SEBI should have been very much there. But there's almost complete silence from SEBI. So has SEBI somewhat stepped back, and should Mr. Tyagi look at the increased responsibilities of SEBI to ensure better corporate governance? Rajiv?
You know, Mythili, there's always this very fine balance to be struck between being interventionist and being proactively, involved to improve corporate governance. And I think that balance, as I agree with you, SEBI in this time did not strike the right balance and hung back when it should have actually acted. But there are two things that SEBI can do even now, despite the fact that it has done enough. One, I think that when independent directors are appointed, SEBI can actually, as on a random basis, interview some of them and sort of, or ask questions about why they should be appointed, as to what makes them eligible, etc., and to also therefore examine their independence, as directors. And two, I think SEBI should get into the business of naming and shaming independent directors who don't behave in the manner that they should have behaved to protect shareholders' interest. And because the fact remains, and I hope Mohan will agree with me, that independent directors, the entire syndrome is a very closed, non-transparent, sort of closed shop sort of situation in India. And I think that needs to change. And that can change if, for example, SEBI also puts out the names and antecedents of all the independent directors on its website. It has all the information for people then to be able to look at them and say and comment on them from time to time. So these are the three steps that I think SEBI could take very fruitfully to restore the balance between being an interventionist and being a good proactive regulator for corporate governance, for improving corporate governance.
That's true, Raji. There is a fine balance, but as far as naming and shaming is concerned, I'm not sure we Indians are capable of being shamed, because there are many things that perhaps would not pass muster in Western societies, but Indians seem to get away with it scot-free. But having said that, Mr. Pai, what would you list as the main priorities before the new chairman? Is it beefing up the commodity markets regulation, because now that is also with SEBI? Is it increasing investor confidence, improving corporate governance? How would you list the main priorities before Mr. Tyagi? Mr. Pai?
Yeah, Mythili, I want to join issue with Rajiv. I don't think SEBI should interview any of the independent directors now. I don't think it's SEBI's job, it's the board's job. Yes, of course, if there's some failure, I think they must investigate and come down hard For example, they've asked the stock exchanges to investigate both the Tata's thing and I'm sure the Infosys thing, and I'm sure they will look at it very dispassionately and see something is wrong. But please remember, we need many more of these cases to come into the open so that more and more independent directors accept their responsibility. Like in the US, like in the UK, like in other countries, great majority of independent directors are quiet people. They're not independent. They just go along with the flow. That's the nature of the beast. I don't know what you can do to change them. And if you come down hard, good people will not want to become independent directors because there's almost no compensation and only a liability. Why should you get a bad name for coming for board meetings? You are not compensated properly in this country, except in one or two companies. So I think that's a very debatable issue. But I think the main task for the new chief would be to look at technology, because cyber attacks are becoming greater, and I think there's a fear that something could come down and improve cyber security across the stock exchanges and elsewhere. To look at algorithmic trading and all the new high frequency trading that's happening and make sure that oversight improve the surveillance system, technology, which SEBI has done. It's done a remarkable job in the last few years. I know about this, and I think they're very, very good. And I think, it must be demonstrated. I think it will happen. And look at trading, debt trading. Debt trading is extremely important. Somehow it is not taken off. I think some things to be done. The commodity exchange. I think the task is set out for the new chairman, and the agenda is fairly clear. Market development and all this needs to be done, and I'm sure he'll do a good job.
Okay, Rajiv, very quickly, because it's almost time for us to wrap up this program, would you like to add to that list?
Yeah, just one of the list, one of the job, which is that the SEBI chief should examine if there are any entry barriers or any sort of what are called the the price practices, the price of the predatory pricing practices that might be being exercised by any of the exchanges, which then curtails competition. So a very important job for the SEBI chief is to improve competition among the regulators of the stock markets, so that the shareholders and investors get their due return. Because I think there are monopolies which are lurking within the stock market or the commodities or the exchange markets, etc. And I think those are the ones that need to be tackled as soon as possible.
Absolutely, but I'm afraid we've run out of time completely, so we'll have to end the discussion now. What is clear is that the new SEBI chief, Ajay Tyagi, will have his hands full. SEBI is still a relatively new regulator, and there are a host of issues like regulations of algo trading, tackling collective investment schemes, developing the corporate bond markets that still await resolution. Thank you so much, Rajiv and Mr. Pai, for joining me in this discussion and helping to chart out the agenda before SEBI under its new head. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at TT Now. Do mail us at the email address that appears at the bottom of your screen and tell us if there's any other macroeconomic issue that you'd like us to take up for discussion. Thank you so much.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.